Welcome to Master Trader's Chart of the Week. I'm Dan Gibby, and in this lesson, I'm going to teach you one of our favorite, easy to learn and apply strategies of selling credit spreads around compelling patterns using the Master Trader method. And it's a fantastic way to generate weekly income from just trading patterns that you're predicting a short-term top or bottom. At the end of these couple introductory slides, I'm going to show you the many actionable setups that exist this week that we are giving to our subscribers. We are technical based traders. Everything starts with a compelling pattern. No setup, no action. Then we take that pattern and we see where is it in connection with the overall trend, support and resistance, multiple time frame analysis. What are the broader markets doing? Is it showing relative strength or weakness? Then we decide whether we're going to trade stocks or options, long or short, and we pick our strategy in accordance with our bias of the underlying. So this is our approach to shorting options or credit spreads. Again, everything starts with the chart. So for bull put credit spreads, you're going to see we're only obviously concerned with bullish setups. But we're earning money through time decay. When option traders buy calls and puts, it's a time depleting asset. It's like this melting ice cube. So when we sell an option, we are making the bet that says, I'm going to keep your money because I don't think that option is going to move in the intended direction and it's going to expire worthless through time decay. I'll show you the patterns that we're going to use. And you don't have to time your entries with precision like with stocks. We do buy options for what we call a directional trade, and that's when we have a beautiful setup and I want to get a big gain from it. The maximum gain when you sell options is the credit received. When high volatility exists, you're getting paid more for those options that you sell. Once we're in the trade, we have different strategies, letting it expire worthless, adjusting our stops, hedging, rolling it, etc. as needed. So here's just another way of looking at this approach to make it real simple. These are the only movements of stocks: uptrend, downtrend, or sideways trends, just by looking at the arrangement of the pivots. So we're going to take a bull put credit spread on any bullish setup. So that could be pullbacks to support and uptrends. It could be breakouts. It could be pullbacks to support and sideways trends. And we profit 2 out of 3 directions. As long as the stock goes up or sideways and can even go down a little bit all the way to my break-even point, we're still making money. This strategy applies identical to the bear call credit spread side and downtrends and reversals at resistance, where we're predicting just a short-term top. The money that we receive, the credit, I call that our cushion. The stock can go against us all the way up to the cushion and we still make money. Similar to an insurance company or even a casino, if you will, where they get paid over and over again because these are high odd setups. And then unless you have a disaster gap against you, then you're just managing these day by day for consistent profits. Every one of these are what we call bullish money patterns. So this is a buy setup and reversal in an uptrend. This is a breakout. These are just all different flavors of turns on support, beautiful double bottom. So with the market now, we are finding many bullish setups, which is why I'm doing this video for you. So we're going to sell a put option under support. We take in money and we have an obligation to buy the underlying at the agreed upon strike price on or before expiration if the put buyer wants us to. But using our patterns, we don't think it's going to go under support. And again, the intent is to keep that premium as pure profit. If you just sold the put alone, that's called a naked put. You're short the put. Nothing wrong with that. Generally, we like to buy a further out of the money put, and the difference of those two numbers is the credit received, which goes deposited right into your brokerage account. One contract represents 100 shares of the underlying, and this limits our maximum potential loss, and it's less buying power requirement at the brokerage firm. This is the S&P 500 ETF, the spiders. And look, my partner, Greg Capra, he calls certain market environments Mr. Schizophrenic. And here's where I have marked here is a perfect example. Up, down, up, down, up, down. Failed breakouts, failed breakdowns, red, green. And so this is very, very difficult to trade directionally, particularly this instrument. Friday, we had a range expansion closing breakout. That is a very, very bullish pattern now, and this is what's setting up that we have so many candidates to sell these put spreads on. So as long as we don't retrace more than 40% into this bar over Friday's high, we are going to have a wonderful week selling put spreads. This is a checklist. You can print it out that I teach in the seminars, and it's a checklist. So again, I want a high probability setup, multiple time frame alignment, only trade liquid options, high open interest, and tight spreads. Is the credit received for the probability of that trade working for the days to expiration, is it sufficient for that risk? We obviously teach that in our seminars, and I'll give you many examples. Is there any pending news that's going to make that particular short put higher risk for a gap against you? Calculate proper position size for your account and trading plan, and then you just execute it at midpoint and manage in between. So here's an example. This is an old example just to go through the mechanics here with you. So this is a beautiful bullish turn. I have rising 20, rising 50 period moving average. I'm going to short this $40 put, and depending on how far you go out is going to determine how much credit you're receiving. And I'm just giving you the numbers in this case. So then we're going to buy a further out of the money put. So this is a $5 wide bull put credit spread. The net credit was 55 cents a share. If you sell 10 of these contracts, then $550 is immediately deposited into your brokerage account. You divide that premium by the potential max loss, 12.3% return. And here's my cushion. The stock's up here at $49. So $9 divided by 40 is the stock can go 18% against me, and I still make money. My cost basis, if I'm forced to buy the stock at the agreed upon price, is the short strike, $40, less the 55-cent credit received. Another example here, we also, so last week in our weekly options trader, we were 18 for 19 in selling these put spreads. And I'm just showing you this one because we also have a specific approach to selling puts and put spreads into earnings on crushed stocks and other setups. So Daco here fell from $77 to high 50s, and then this was into earnings. We had a wide range igniting bar on volume. We go to the option table, and I call it the juice bar, because I want to see what the juice is. What's the premium that I'm going to get for accepting this risk of having to buy Daco? And notice here, so I have 8 days to expiration. We went down to the 42.50 puts. This is how we communicate new trades and adjustments to our subscribers. This was the weekly options trader. So we're shorting 42 and a half puts, 71 cents a share. We give the technical setup into earnings. The very next day it gapped up here, as you can see. We sent this adjustment out the next morning, closed it at 3 cents to eliminate 7 days of risk. But 71 cents for the stock, let's just call it $57.50. So it was $15 lower. And if you sold a 10 contract, $710 into your brokerage account. This is one of our subscribers, and it's such an amazing strategy because this is what happens. I made money and the stock went against me. Obviously not every time. We do have losses when the trade goes against us and we just stop out of it or adjust or something that makes sense with the pattern. And at this particular time, we were 28 for 29 closing gains, and A nice 3-week total at this particular time, 54 for 56. The strategy works. You know, people who trade just options by the Greeks, by the numbers, and who don't believe in chart analysis, technical analysis, we say that's an ostrich approach. You're just denying reality. Come check us out in the green trading room. My partner Greg Capper and I start every market at 9 a.m., give a market review, our tier 1 list, we review opens, gaps, etc. Experience the power of market knowledge in real time, we say. All right, so here are the spiders, as I showed you. We have a beautiful, beautiful closing breakout with a price void. So the number of these trades I'm going to show you are directional trades also. You can buy over the high or buy in the money options, and it's a directional trade. But I'm going to show you this approach of we're selling out of the money puts and put spreads around these compelling patterns. Let me show you our open trades first in the weekly options trader. We have 9 of them. So on this gap breakout on Wednesday, we shorted the 172.5s. So remember what I taught you? So we shorted a put under last week's low. It gapped up. We've already taken half our profit, and we're in trail mode. You know, so this is a great example of I would not buy this stock. It's a mess. But many times, messy patterns can provide opportunity for us because, remember, all we're doing is saying, I don't think it's going to go down to the strike price by expiration. So we sold the 360s way down here where my horizontal line is, right here, 360. And we have 5 days of risk. As long as it stays above 360, this is a beautiful range expansion, 180 reversal on major support. We sold it for a $10 wide spread for $1.04 a share. Nice little gap breakup from a little continuation pattern. We shorted the 315s under last week's low. Make money through time decay. 2 little climactic ones here, LUV and airline. A little gap reversal breakout on the daily. We shorted naked puts. Northern Caribbean cruise line, all the same, climactic 180 reversal. So remember, the premium we take in is pure profit. We make that money as long as it doesn't close under our short strike, the $12. It can go up, it can go sideways, it can chop around in a coma, and we're making our money every day through time decay. Microsoft down a lot, Wall Street favorite, reversal bar Friday. We shorted the 217 $10 wide put spread for next Friday. Qs, a nice little bullish range expansion on major support. We sold a put spread on this on Friday, the 260 250 for $1.50 a share. XLY, another little Climo and reversal and wide range breakout. So those are open trades. I'm going to now show you the ones that we have on our list for next week for our subscribers of the weekly options trader, which focuses on selling these options that expire 10 days or less. Caterpillar here, gap breakout, beautiful. We'd sell a put spread under Friday's low. Marriott, gap breakout from this climactic buy setup. We'd sell a put spread under Friday's low. GNRC, monster bottoming pattern, daily, weekly. So over last week's high, we're going to sell a put spread under last week's low. Tesla, nice gap reversal. It's what we call a W bottom with a new low plus. Look at all this volume. You know, this thing's down from 300 to 113, just getting killed over Friday's high. We're going to sell a put spread. Square, bottoming pattern, closing breakout. After this breakout, continuation bar. Diamonds over Friday's high, put spread. I mean, these are all over the place. So come check us out in the green trading room where you'll watch us enter these and manage them throughout the week. We have a $7 trial to the green trading room, as I said. This one over Wednesday's high, LOW. Then we'd sell a put spread under Friday's low. VMC, wide range breakout. You know, you see that I can show you hundreds of these. WSM, breakout, multi-month bottoming pattern. UPS breakout. So again, I mean, look at this. So this looks like it wants to continue to the 200. So this would be a candidate for a directional trade also, but we're selling a put spread under last week's low. In this one, I'm looking to get 65 cents a share for selling the 175, 170s, and all it has to do is go up, chop around, or even can come down all the way to the break even, and I keep the money. Zoom bottoming pattern, little retest over Friday's high, gap breakout. So those are all the ones in the weekly options trader. In our swing and advisory letter, we trade stocks, options, long, short, cryptocurrency. We trade everything in there. And so I do give put spreads in there too that typically are a little longer in duration. So here's a couple of them just because I didn't have weekly expirations, but I'll show them to you real quick. It's just the same. RJF, gap breakout from a big bullish turn on the 200. Here's an example. We're giving this one as a directional trade. Square and diamonds using options in this letter, but the weekly options trader, we're just selling options for the income. Travelers here, gap, closing breakout, all-time highs. It's just beautiful. So over Friday's high, we'd sell the 190, 185 put spread. So again, come check us out in the green trading room or take a month try to the weekly options trader. This is a fantastic strategy. We use it regardless of what the market's doing. You saw what the market's been doing the last 3 weeks here, but we've been making money every day using this approach, and it was a very successful strategy last year also. Hope that helps. As always, you can email Greg or me with any questions. Good trading, and look forward to seeing you in the next trade review video.